Good day crypto trader. Bitcoin at 30K, back to the bottom of the long-term range. Bitcoin collapsed 9.5% on Monday and dipped temporarily below $30,000 in early trading on Tuesday, stabilizing at $31,300. Ethereum has lost 3.9% in the past 24 hours, while other leading altcoins in the top 10 have fallen from 8.7%, Solana, Cardano, to 12%, Avalanche. Total crypto market capitalization, according to CoinMarketCap, fell 7% overnight to $1.44 trillion. Bitcoin's dominance index rose 0.3% to 41.8% on more altcoin weakness. The cryptocurrency fear and greed index was down 1 point to 10 by Tuesday and remains in a state of extreme fear, touching a low point for the 7th time in the past year. An even higher level of fear in the last 4 years that we have only seen in March 2020 and September 2019. Terra and TerraUSD continue to lose ground. Against this backdrop, the Luna Foundation Guard, LFG, has committed $1.5 billion to protect the stability of UST and the Terra ecosystem as a whole. Stablecoin UST, designed to be as close to the value of the USD as possible, lost more than 30% at one point overnight. But at the time of writing, it is trading at a 14% discount to the US currency. The current plunge is a retouch of the lows made in January and July last year for the first cryptocurrency. This could look like a last line of defense for the bulls, who may try to push back from the lower end of the trading range since early January. However, many markets are on a similar informal frontier separating a correction from a potential collapse, so the situation in the crypto market could largely determine sentiment in the deeper debt and equity markets. Judging by the dynamics of stablecoin, the crypto market is undergoing one of its most massive tests of the entire market periphery, which could determine the credibility of the crypto market for many months or years to come. As we can see, Ether and Bitcoin remain resilient and robust enough to make them somewhat of a safe harbor within the stormy crypto sea. At the same time, the collapse in quotations has not yet affected miners' confidence in the cryptocurrency's future, as the BTC network's hash rate continues to grow. Ray Dalio, the founder of Bridgewater Associates, one of the biggest hedge funds, said that Bitcoin should be in investors' portfolios. Still, the cryptocurrency itself is not a good competitor to gold in terms of inflation protection. But that could change in the next 5 to 10 years. Where to exit Ethereum before it crashes to $1,700? Ethereum price bounces off the $2,200 support level after a 12% crash over the last 3 days. Investors can expect a retest of $2,541 before ETH crashes to $1,730 to collect the sell stop liquidity. A 3-day candlestick close above $3,079 will invalidate the bearish thesis by producing a higher high. Ethereum price has sealed its bearish fate after breaching the consolidation pattern's lower trend line on May 6. This development has worsened the situation and caused a steep correction for ETH. Ethereum price provides an opportunity. Ethereum price set 3 distinctive higher lows and 2 higher highs since the January 22 crash. Connecting the swing points using trend lines reveals an ascending parallel channel. This technical formation ideally results in a bearish breakout. On May 6, Ethereum price breached the ascending parallel channel's lower trend line, indicating a breakout. This downswing move caught traction and led to an 18% drop in ETH price in less than a week. At the time of writing, Ethereum price is trading around the $2,199 support level, where buyers seem to be scooping ETH up at a discount. However, considering where Bitcoin price stands, further downside seems more likely. Hence, investors need to be cautious and smart in buying the dips. There might, however, be a minor uptick in buying pressure that could push Ethereum price up to the $2,541 hurdle. This level is likely where the upside is capped for ETH before sellers take control. Supporting this downswing in Ethereum price is the 30-day intraday market value to realized value, MVRV. This on-chain metric is used to determine the average profit/loss of investors that purchased ETH over the past month. Based on Santiment's research, a value ranging from -10% to -15% is termed an opportunity zone, since the short-term holders are at a loss and are less likely to sell. However, for ETH, the local base was formed around -16%, which is where the MVRV is currently at and also explains the recent uptick in buying pressure. However, there is another potential base around -30%, where ETH stabilized after crashes in May 2021 and January 2022. Therefore, the chances of Ethereum price heading to $1,730 are high as portrayed by the MVRV 30-day chart. Further worsening the situation for bulls is the supply distribution seen across whales holding between 100,000 to 10 million ETH. The first set of wallets, those holding between 100,000 and 1 million ETH, has dropped from 1,452 to 135 over the past 3 months. For the other group, these numbers have dipped from 8 to 5. The generalized decline in institutions holding Ethereum indicates that they are not confident in the performance of ETH price in the near future. Driving the bearish thesis home is the recent uptick in the supply of ETH on exchanges from 14.86 million to 15.37 million since April 20. This 3.4% surge indicates that investors are moving their tokens to centralized platforms to potentially sell and also adds credence to the outlook described in the supply distribution chart above. While the bearish outlook seems plausible, a spike in bullish momentum could alleviate the sell-side pressure. However, a 3-day candlestick close above $3,079 will invalidate the bearish thesis by recovering its losses. In such a case, Ethereum price could further rally to $3,703 and set a higher high, confirming the start of an uptrend. Binance halts TerraLuna and UST withdrawals after brutal crash. TerraLuna and UST prices are in free fall, having plummeted 53% and 15.5%, respectively. Binance cited network slowness and congestion and suspended withdrawals for both Luna and UST. Terra used Bitcoin reserves to defend USD's peg. Now, $1.4 billion Bitcoin is on the move, hitting exchanges like OKX. Terra's algorithmic stablecoin UST entered free fall after losing its peg. The stablecoin is now trading at 87 cents, 13% below the $1 level, and the Luna price has dropped over 53% overnight. Cryptocurrency exchanges like Binance have suspended withdrawals for Terra's Luna and UST. Terra price nosedived, as algorithmic stablecoin UST collapsed. UST Terra, the algorithmic stablecoin of Terra, slipped from its $1 peg to its lowest point of 74 cents over the past few days. UST is currently trading 13% below $1, at 87 cents. The stablecoin continues to trade solidly below its peg. In a broad market-wide sell-off, Terra's Luna and UST collapsed. Du Quan, the CEO of Terraform Labs, considers this sell-off a coordinated attack against the protocol. Quan assured investors that the Luna Foundation Guard, LFG, Council is not trying to exit its Bitcoin position by moving $1.4 billion in BTC and UST. Instead, it is putting capital in the hands of a professional market maker to strengthen the peg of the algorithmic stablecoin. The world's largest cryptocurrency exchange Binance has suspended withdrawals of Luna and UST, citing network congestion and slowness. Withdrawals for both tokens were suspended at 2:20 UTC on May 10, 2022, as there was a high volume of pending withdrawals. The exchange has announced that withdrawals will resume once the network is stable. $1.8 billion were wiped out of USD's market capitalization since it lost its peg. Since UST is an algorithmic stablecoin, it maintains its peg by burning Luna and minting UST. The LFG Council has deployed vast amounts of Bitcoin reserves to restore the stablecoin's stability, to no avail. Proponents in the crypto community have criticized UST and believe it is not truly decentralized since it has collateral backing used by a single party that performs open market operations. Since Terra has failed to defend the peg, the colossal crash has fueled a bearish sentiment among Luna and UST holders. Samuel Bankman-Fried, the CEO of FTX Exchange, had predicted that volatile assets wouldn't survive market crashes nearly a month ago. Iron Finance's stablecoin Iron recently crashed to zero, making UST the second stablecoin to fail. 243 million SHIB burned in the last 24 hours while ShibaInu price is in free fall. ShibaInu burn portal reported 243 million SHIB tokens were destroyed overnight, in a total of 54 transactions. The Dogecoin killer's price continued its downward spiral, hitting its lowest point in 7 months. Analysts predict further consolidation of ShibaInu and a drop to the key support level at $0.000011. ShibaInu price has hit its lowest point in 7 months after multiple consecutive declines. The ShibaInu burn portal reported the destruction of 243 million SHIB tokens overnight. Despite the burn of ShibaInu tokens, the Dogecoin killer's price has failed to recover from $0.000011. ShibaInu price nosedives despite consistent SHIB burn. ShibaInu price continues to weaken despite the launch of ShibaInu burn portal on April 25, 2022, leading to a massive burn of SHIB tokens. Overnight, 243 million SHIB tokens were burned based on the ShibaInu burn portal data. Burning the meme coin effectively reduces its circulating supply and increases the value of the token. 3 massive chunks of SHIB were burned since Friday morning: 405 million, 311.8 million and 243 million. Despite consistent burn of SHIB tokens, the meme coin has continued its downward spiral. In the recent crypto market bloodbath, ShibaInu hit its lowest point in 7 months. After hitting its lowest threshold in 7 months, ShibaInu price marked its steepest fall. SHIB is trading at $0.000016 at the time of writing. Analysts have evaluated the ShibaInu price trend and predicted a downward trend continuation. Crypto analyst and trader evaluated the daily ShibaInu price chart and observed a decline below key support at $0.000017. After hitting its lowest level since January 2022, ShibaInu price plummeted below the descending trend line and slipped below the 78.6% Fibonacci retracement level. ShibaInu is likely to continue its downward spiral, with the next key support at $0.000011. Why AxieInfinity price could crash another 50%. AxieInfinity price has formed a head and shoulders pattern, indicating that there could be a further move south. There might be a minor upswing to $28 before AXS reaches its target of $11. A 3-day candlestick close above $44 will invalidate the bearish thesis. AxieInfinity price is traversing a massive top reversal pattern on the 3-day chart. The recent crash is a taste of things to come for the massively inflated market value for AXS. AxieInfinity price pauses. AxieInfinity price has formed a massive head and shoulders pattern over the last 9 months. This technical formation contains 3 distinctive peaks. The one in the middle is the head and is the tallest. The 2 peaks on either side of the head are known as shoulders and are almost equal in height. This technical formation forecasts a 73% downswing to $11, determined by adding the distance between the head's peak and the neckline to the breakout point at $44. So far, AxieInfinity price has dropped 46% since its breakout on April 25. There is more to go. As seen, AxieInfinity price needs to nosedive another 52% to reach its forecasted target at $11. However, this downswing might come after a 10% uptrend to $28 as AXS is currently tagging the $23 support level. Supporting this steep descent for AxieInfinity price is into the blocks global in/out of the money, GIOM, model. This index shows that the immediate support level, extending from $15.53 to $8.00